Hello from the Dukas Copy TV studio in Geneva. I'm Daniel Schwenger and we are back with our weekly overview over the currency, commodities and equity markets with our analyst Jean-Francois Owczarczak from the Management Joint Trust here in Geneva. Jean-Francois, welcome to the studio.
Hi Daniel.
So if we look to the general picture at the beginning of the week, how does it look like your system fingraphs.com? What does it show?
Okay, well, we're back on our FinGraphs mosaic, where we have euro dollar, cable, gold, Brent, dollar Swiss, dollar yen, 3 months S&P futures and 30 years treasury bond futures. And we're going to start with the euros this week. And this is an investor's view of the euro. It basically gives the investment perspective for investors over the next few quarters with the weekly chart, over the next few months with the daily chart, over the next few weeks with the hourly chart. And as you can see at the moment, the at-a-glance view is that all three trends are still heading down. We will go into the various investment horizons, and first of all into the weekly perspective. The weekly perspective is still in a bear, and we believe it still has potential down over the next few quarters. If you can see, the risk index is not yet oversold. There is a bit of stress on the envelopes, but they are still descending at the moment. And our targets projections point to a target range between 118, which we are at the moment, and possibly down to 109 over the next few quarters. So at the moment, the trend over the next few quarters is still heading down for the euro. For the daily chart, we are in an extended move. If you can see, we're still bearish, but it actually is labeled here impulsive 2 down. This is usually reserved for very extended moves, and that's what we think we are in at the moment. We see our risk index is very, very low into the oversold. The targets are not quite fulfilled yet. They could bring us down to below 116 over the next few months. However, this exaggeration plus the envelopes touching each other is starting to ring the alarm bells on maybe we could have an intermediate bottom over the next few weeks. Now looking at the hourly, we're still heading lower. We've done the impulsive targets. We're not yet have started into the impulsive 2 targets. The risk index is also quite low here. At the moment, it's still in a downtrend. So we cannot confirm this reversal or intermediate bottom yet. But the initial targets, impulsive down, have been fulfilled. I'll quickly have a look at the trader's view, which is the view for traders with a perspective over the next week or so, over the next day or so, and over the next hours with a 60-minute, 15-minute and 4-minute chart. Also here you can see that you're in a bull trend on the euro dollar, but it's only a correction up, so that basically tells us that it's not a very strong move yet, it's only a correction. So also here we cannot confirm a reversal yet. We would really need to make it above 119.25 to create the impulse for a stronger impulsive move over the next week or so. So at the moment it's still in a downtrend, and the 15 minutes are leading us possibly over the next day or so down to 117 or 117.20. So to recap, if we look at the investor's view, we've gone a long way on the daily chart. We're getting into the targets. The hourly and the trader's view don't quite confirm a reversal yet, but we might not be too far from it. However, over the longer term, over the next few quarters, if there's a bottom over the next few weeks, it should be only an intermediate bottom, and there's more potential to the downside into the year.
Thank you, Jean-Francois. And if we look to the equities, there has been more a volatile situation in the recent days, more look and see kind of feeling. So what does the technical analysis say? Okay,
well, we are on the S&P future here, also with on an investor's view, with a weekly, a daily and an hourly chart. The perspective over the next few months is one of a very extended move, but which doesn't seem finished yet. The targets are labeled impulsive 2 and could lead us below 2200 up to perhaps 2400 over the next few quarters. So we would still be bullish over the long term on equities. It is an extended move. You can see the risk index is well into the overbought. It hasn't turned yet, but expensive but not finished. And on the daily chart, we've reached our targets, but we're still in an impulsive up. The risk index has come down quite a bit since this summer. And with the trend still heading up at the moment, despite the recent volatility, we would have the tendency to label this more as a consolidation for now, rather than a reversal. We would also base that on the weekly, which is also still positive. And then if we go on to the hourly chart or the perspective over the next few weeks, we've had a correction down since late December. It is labeled correction down done. It actually reached our corrective targets. And it now seems that it's trying to make a new move to the upside. It does have quite a solid base, because if you see, the risk index has come down quite aggressively down to the oversold zone. So you would have what is labeled as a mere correction for now, and with some positive price move, meaning that we haven't made new bottoms over the next week, over the last week or so. And the risk index is now in the oversold territory. So if we base this on the daily, which is still heading up, and on the weekly, which still has some potential in the next few quarters, at the moment we would be in a position to be close to call a resume uptrend. Now, our warning sign would be if we make it below these corrective targets again, and these would be slightly below 2,000 or slightly above 2,000. And that would trigger an impulsive move down. And in that case, we would become a bit more concerned about the situation.
Thank you, Jean-Francois. So if we look now to the commodities, there has been a lot of talk about the oil price, of course, which has been going down. Now we have also seen the gold price really going up, the mark of 1,200. So what does the FinGraphs system say? Okay,
well, we'll quickly start with oil and go on it quite quickly. Basically, also a weekly, a daily, and an hourly chart here. It seems like the targets that we have set on the weekly chart, or that the machine has set on the weekly charts, are pretty much fulfilled around this 46 mark that we had here. Bear in mind that there's still time left in this move, and as the move accelerates, our volatility measure also expands, which will revise the targets down. So there might be a bit more, but that's a gradual process. So in essence, we think the larger move has been done. On a daily chart, we're also in an impulsive 2, but getting close to its targets, which are around 43. The risk index is well oversold. There's a bit more time left, so it's probably going to work an intermediate bottom here over the next month or so. But in essence, also, the very strong move is probably behind us. Now, on the hourly, it seems that we are also a bit overextended here with an impulsive 2 around the 43, which would also mean that we could see a bounce here over the next week or so. So basically, all three trends are still heading lower, but are getting into targets, which would mean that although we can't confirm a reversal or a bounce yet, we have probably had seen the worst of the move down. Now, on gold, last week we told that gold was still in a downtrend on a weekly chart, which here shows a target that could lead us below 1,000 over the next few quarters, and which has already reached the initial target boundaries. However, the trend is still heading lower, and there's still time left in this move. It's well oversold, so we would really need a confirmation over the short-term frequencies to finish off the move. Now, over the daily chart, we can see that we've seen quite a bounce in price over the next month and a half. The 1,200 mark, which had been worked around quite a bit over the next few months, seems to have finally let go. The next resistance is probably towards this top back in November, which is also confirmed by this bottom here in May. So we would expect quite a bit of a resistance towards 1,250. Now, if equity markets are still faring well, and if the perspective of interest rate hikes in the US are still in the cards, we don't believe gold could shoot up at this stage, because we don't really have any financial stress other than a slight equity correction since the beginning of the year. And we also think that with short-term interest rates in the process of coming up, the financing cost on gold should cap the price. So at the moment, we're still in a downtrend. We've used this 1,250 resistance as a serious one, and we believe that it could probably stop the move up that we're seeing at the moment. On the hourly basis, we can see that we're in an uptrend. We're in first points of stress, but we still have time, so gold should continue up over the next week or so, and our targets between 1245 and 1258 pretty much come where our 1250 resistance would be. So we think this is a short-term move. It's not quite finished yet, but we would need more confirmation to confirm a major reversal here.
Thank you, Jean-Francois, for our weekly analysis, and we will see you next week again.
Thank you very much.
And thank you for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest news and analysis. Have a great day and see you next time.